countdown. And I just realized that my mic is not on. I do apologize for that. So let's go ahead and start all over. Good afternoon, good morning, good evening, everyone, and welcome once again to this special session. All right, so quick update. We're going to be talking about the coronavirus. We're going to talk about rate decisions. The Feds went ahead and cut the rates this week. Remember, they were only expected to come out on the 18th of March. They came out just recently, day before yesterday, and they cut 50 basis points. 50 basis, not 25, 50 basis points. I call it a penny cut. We had the same thing happen with the Canadians. The Canadians came out and cut the rates, not 25, 50 basis points. Now, remember, the Aussie started this week cutting 25 basis points. We had big moves in the Aussie, and then we had, of course, everyone else following. This is going to be exciting to talk about. We're going to chat about it. We also have OPEC meeting taking place today. The whole day today, we've seen movement in U.S. oil. Brent oil is down. S&P down. Dow down. The DAX down. We've got everything down except one thing, gold. Gold is rallying, and we should be hitting 1,800. We'll talk all about that with my guests in today. I've got Tyson Clayton. I've got Chris Pulver. And we're going to talk about exactly what's going on in the market. With that being said, let me go ahead and introduce you to the team. And here in the team we have Chris Pulver. Good day.
Hey, Gary. Hey, everybody. Nice to see you. Nice to be with everybody.
Fantastic. Good to have you here, Chris. We've got a lot to talk about, and I know you've got a lot to share with the guys as well. Tyson, good afternoon to you, my friend.
Good afternoon, Gary. Hey, Chris. You said, I got to correct you real fast, Gary. You said we got one thing up, and that's gold. Bitcoin. I'm telling you, we can't not talk about Bitcoin. Cryptocurrencies are going to be one of the safe havens, so we'll talk about that too.
Absolutely. Well, Bitcoin, we can share a lot of information about Bitcoin around Bitcoin, but let's talk about the first thing that comes to mind right now is, of course, the coronavirus, right? What effect has that been taking in the market right now? We know that the GDP is down. Airlines are taking a beating. There's a lot of companies taking a beating. A lot of guys are, I would say, in panic stages at the moment right now, really concerned about the economy. We know that the stimulus program is starting to kick in, specifically with the Feds cutting the 50 basis point this week, where they were supposed to be out on the 18th, right? So what effect have you seen in the market right now, Chris, based on what's happening right now?
Well, it's not a surprise. In fact, I was on the road on Friday, heading down to Indiana. Last week was a pretty much a savage week in the markets. We had, one of the biggest weekly drops. We had one of the biggest weekly rallies ever in the VIX. We had one of the biggest drops in one time, most points ever lost in the Dow. The VIX was up to levels that we haven't seen since 2015, 2011. And if it goes any higher, then we're looking at 2008. Coronavirus, I think, sparked the central bank talk. I mean, last week we had comments from Jerome Powell. I was probably as surprised as anybody that the Fed acted as quickly as it did. but it's not a surprise that the Fed was seen this week as being proactive. Now, my problem with that, and I'm curious what your guys' thoughts are as well. My problem with the Fed taking action and being, quote, proactive this week is cutting rates by 50 basis points brings them down to 1%, 1.25%, which is back where we started in 2018 when we started to raise rates. So the problem with is in fact, in my trading room today, we actually took a look at the bank rates back in 2008, and we looked at the global central bank rates in 2008. Every country was between like 3, 4, even up to 6 and 7% across the board. So with this kind of race to the bottom that started back in 2008, 2009, that's continued to run through that decade, I think my concern is that there's almost like there's not enough that the central banks can do to prevent really all of this from slowing down. And again, I look at it as it's there to soothe the markets. It's like think of Wall Street as like a strung out junkie, and all of a sudden, it's like the Fed comes in. It's like, oh, here's your little here's your little drug. Like, just take it, just settle down. And like the market you saw one of the biggest rallies per day, like the biggest point rally in the Dow on Monday as a response. And then they cut rates on Tuesday and the market drops. It's like the market kind of needs the reassurance from central banks that everything's going to be okay. But in the background, in the peripheral, we still have this coronavirus, which continues to explode. Now, we are seeing cases plateau in China, but you have hotspots now in South Korea and in Europe and Iran. And if it's not contained and we don't see some optimism with the containment or additional testing of coronavirus, that uncertainty will continue to ruin sentiment, and there's nothing that central banks can do. So that's the problem, is they're all speaking up. They're trying to pacify the markets, but there's nothing they can really do with the monetary policy tools to really prevent what we're looking at in the markets, which is more panic, more selling, more. But again, with any other major virus we've seen, any other major outbreak, whether it's Ebola, Zika, SARS, I think that it's still, the reality is that coronavirus, there's an unknown to it, there's an uncertainty to it. It is certainly spreading. Like you said, Gary, airlines are canceling, they're sending back rebates, or they're canceling flights. And good thing if you're traveling, you got insurance. I've got trips. I've got trips, like 2 trips planned, one in July, one in December. I haven't canceled anything yet, but I had neighbors of mine that were supposed to be going to Italy this week. Some that were going to Thailand next month, and they've canceled all these trips, which I completely understand. So when you hear, non-essential travel, then I'm all for it. Like, take the necessary precautions. I do think that this is the right approach as far as, from a business standpoint. It's like the right approach would be do whatever you can to contain it, and then see if we can start to plateau the cases, plateau the death toll, start to see some recoveries. And, hopefully sooner than later, you're going to hear something about a vaccine, and that could give some markets some sliver of hope, because right now it seems pretty scary out there. And, again, as traders, there's opportunity everywhere, and there's no shortage of it right now. Even when the markets are tanking, there's instruments to trade. Like Tyson just said, cryptocurrencies. We've got gold going crazy. We have risk-off pairs like Japanese yen, Swiss franc. They're moving. So if you're a scalper, you've got plenty of opportunity to take advantage of it, which is what we're doing.
Yep. And Tyson, what is your opinion on this, my friend?
Yeah, it's one of the things that I always think about, and we had a conversation in one of our analyst meetings a couple weeks ago, is the known unknowns, right? And so the way that I look at this is with the Fed coming in more of like a panic cut. If we look at the history of these type of cuts, it happened in '98 with the long-term capital management blow up, but that was kind of a one-off. That was a hedge fund that got too exposed and blew up. That wasn't a big, catastrophic, public event. We had the September 2001, obviously, event, September 9th. That was big, or September 11th, sorry. And then we had the housing bubble collapse. But the interesting thing is every time that they came in and cut, approximately 6 to 9 months later, the market had fell anywhere from 20 to 30% more in like a 6 to 12 month span after that initial cut. And what it does is it causes, it's almost like a sign of panic, and it makes the public think, well, wait a minute, what is it that we don't know that they know? And you think about what's going on with these the travel restrictions and stuff like that is okay, this is bad, but I don't know if any of us know anybody that has had this illness yet. And so but how bad could it get? And you start to see some of these numbers coming out. And China's getting a lot of the headlines, and whether we can, trust the numbers coming out of China or not, the one that's really starting to get a little crazy is South Korea. South Korea per capita, actually, if you take into account population, they would be equivalent to China. They would have 160,000 cases right now if they had the same population as China. So on a per capita basis, and that's double China, on a per capita basis, in an economy that we can trust the numbers, they're starting to explode and get pretty darn scary. And so the permeating effect with this is going to be not just the airlines. It's going to be, think about this, it's going to be hotels. It's going to be restaurants. It's going to be, malls are going to be affected. My wife and I, we get gift certificates. It was her birthday this weekend, and we got a gift certificate to a couple restaurants. And it's like, wait a minute, even that kind of stuff. We're not going that far yet. But eventually, are we going to stop and think, well, geez, I have a bunch of workout equipment at home. Am I going to stay at home and work out rather than go to the gym? And so these are the kind of things that, and Chris and I, you remember we talked how you and your wife are going on a trip, and it's starting to affect our everyday, day-to-day decision-making. And that's the way it starts. And that's the one, and I don't want to call it scary, because in these times we have money-making opportunities.
Sure.
But the one thing that I think that that hasn't been priced in yet is, what is this going to do to corporate earnings? And I have some things that we can get into in a little bit here of where I think what I think will happen to corporate earnings, and then what multiple will hedge funds and investors pay on that earnings. And so the nice thing is, like Chris said, in this uncertain time, in times of chaos, there's opportunities, especially for people who know what we're doing and trade multiple asset classes. So it's exciting. It's obviously concerning health-wise, and you pay attention. But I have a responsibility to myself, to my family, to my loved ones, to do the best I can to generate income as well as you guys do. And what's nice is what we teach helps traders make money up, down, wherever the market goes.
Right. And on that subject there, the one thing that we have to realize is that when we have these uncertainties, when we have these things that are scaring people to travel, to go into restaurants and to eat out of restaurants and to go to these different events. Like, I've got a trip that's coming up in a couple of weeks in LA. And I've gone ahead and said, you know what, I've got to say no to that trip, because first thing, number one, you've got to think about it. It's It's airplanes, hotels, airports, conferences, meeting other people. I mean, everyone's going to go. Everyone's going to be fist bumping and just say, hey, just stay over there. I'm okay with saying hi from this distance. And it does affect a lot to do with what's happening in the economy, right? Why the Feds are going ahead and cutting so aggressively, because they're trying to stimulate. They're trying to say, hey, listen here, GDP is going to drop dramatically with people making provisions and not going to gym and not going to eat out and not doing this. Things are going to start reducing, and so they've got to kick in and say, hey, let's do something to help stimulate. But this is going to continue, right? And I think if we look at gold, and I'm going to go ahead and flip over to that chart, but if you look at gold is actually at the moment right now rallying up, and they're talking about this particular pair continuing its rally over the next few months, heading into the second quarter. And if that's going to be the case, would you guys not think that this means that we may not get into, look, obviously we get to some sort of resolution, and they find an antidote to be able to fight this virus, things will not change. We will continue to see gold rally.
I'll mention that. So I may differ in opinion on this one. I am a gold fan in inflationary environments, and recessions and hard times are not inflationary; they're deflationary environments. And you go back in history and you look at 2001, 2002. You look at the financial collapse, and gold did not perform all that well. It performed well afterwards, after the Fed came in and started to inflate the economy. but it had not performed all that well. Initially, a lot of times it's looked at as the initial safe haven, but when it's all said and done, what typically happens is it kind of settles in and floats down because it is an inflationary type of asset class. Also, the other thing that I think of, it's looked at as a kind of a store of value and kind of a safe haven. But I've never met anybody in my life to go and go to a store and plop down a gold brick to pay for something. I think the usefulness of gold is not. It's not useless. It's used in technology and it's used in different things that we use. It's used in jewelry, obviously, but the usefulness of it is not necessarily great. And I believe that the technology to mine it has exponentially gotten better. So the amount of demand or the amount of supply out there, I think, is higher than what we initially thought. The demand, I don't think, is necessarily all that high. And not only that, but also I am not convinced we're going into an inflationary environment at all. And the bond market's showing that. And if that's the case, then I think long term or over the next year to two, I think there's better places to hide out than gold, in my opinion.
Right.
Yeah, I would agree. And honestly, if you look at the charts, Gary, I mean, go to the higher time frames. Like, where are we going? I mean, we're at 1660, 1670 right now. You look back into the highs just a few years back, it's like we're in the 1900s. I mean, sure, I could see it. I could see it drifting. I could see it drifting and running. But are we really gonna, blow through that $1,900 to $2,000 an ounce? I don't know. I don't think so. Based on what I'm seeing on the higher time frames, and that's, I think this, if we're looking at technicals, and the three of us, we've had this discussion, outside of Facebook Live, we've had this discussion, week in and week out. What I am thinking about is, this type of movement right now in the markets is making me really look at daily, weekly, monthly charts, period. Because there is obviously a lot of aggressive movement. There's a lot of aggressive volatility. We have not seen volatility like this. I mean, probably since, your Brexit, 2016. Like, this is about the last time that I remember seeing some continuous days of, euro dollar moving 100 pips a day. We haven't seen that for years. And just the last couple of weeks, we're starting to see it pop up to 120 a day, 140 a day. So it's actually making some decent runs. Same thing on the yen pairs. We've seen yens, trading ranges as low as, pound yen's probably the high side of maybe just over 100, maybe 130 pips. Most of the yen pairs are still in that 40 to 60 pip range. Just in the last couple of weeks, we've noticed, easily yen pairs are getting over 100 pips a day. And it's not just a one-off. Like, yen pairs are continuously showing some higher volatility. So again, I go back to the higher time frames, the daily, the weekly, the monthly. Even though these movements seem like straight up and straight down, one thing I fall back on in the Forex market is that it is an amazing market to still find ways to balance. And so some of these extremes, and I'm curious what your guys' thoughts are. Some of these extremes that we're seeing, I honestly feel like are going to give us a tremendous medium to long-term trade or medium to long-term investment. Even as a Forex trader, I'm looking at some investment pieces where it's like, if I just buy this and walk away for 6 months, if I buy this and walk away for the next year, what does that look like? And from some of these levels, we're talking about levels that haven't been seen at these highs and these lows for 5, 10, 20 years. And if I'm looking at historical evidence and I'm looking at any type of support resistance levels that we should see some reactions from, we are heading into those levels, or we are at some of these levels where I have to believe that the longer term is going to be the better play here on some of these big moves that we're seeing. So any thoughts?
On that, I had a trade, and one thing that you mentioned about, we have markets rallying up. One of the saving graces of the market right now, because we're selling off, but I don't think this is anywhere near panic. It's been volatile, but it's been somewhat orderly. And so here's the deal, though. It's one of the saving graces is diversification. A lot of these fund managers have had they're long stocks, they're long bonds, they're long gold, and they have cash positions. So their dollar's been doing decent. The bond market has been rallying like a banshee, so that's been their saving grace in losing money in their stocks. And the commodity currency has been doing pretty good too. So here's the scary thing though. If gold and commodities, not oil's selling off, but if gold starts to sell off, and if bonds kind of create a floor and they start to sell off, and the market doesn't rally, then we could start getting forced selling. So we go from willing selling this because I want to de-risk to panic selling because we have to deleverage. And that's the scary part. But I just had this idea, and I want to run this by you guys. I just thought of this, and it kind of plays into this diversification idea.
And before you do, Tyson, let me just go ahead and just switch over, because I want to see everyone in the screen right now. So let's go ahead and switch over. So continue.
Yeah, so diversification idea. So gold prices, so there's currencies, and I talk about a lot of this in like global wealth. There's currencies that fuel, that feed, and that build the world. And then there's currencies that fund the world, right? And so there's commodity currencies, and then there's kind of funding mechanisms. And the Australian dollar is typically a building. It's known as kind of more of a building type of currency because it's very correlated historically on iron ore prices, gold prices, silver prices, different things like that. But what's interesting is we have a broken correlation going on right now. So I love the idea, as you were talking about this, I love a hedge trade, shorting gold, buying Australian dollar. I think something like that to bring home might be a brilliant trade, because we could have a catch-up trade where if gold continues to rally up, the Australian dollar could catch up, or if gold sells off, the Aussie might stay stable and might come down. So I think something like that, a hedge trade like that, could pay dividends. I kind of like that idea.
Based on my exposure on the Aussie, Tyson, I would say.
Hey, same here.
So I'm assuming that you're buying right now, Chris. Are you buying Aussie?
Yeah, we had this talk last week. I mean, personally, and again, they're all manageable positions. I sent out a video last week on my social media outlets, Instagram, Twitter, YouTube, that, look, I'm in a drawdown on Aussie CAD. It's very small, but with the recent rate cut on the CAD this week, the BOC cut rates by 0.5%. Oil is dropping with OPEC needing to step in. Russia's a big part of that. I can see the CAD being weaker right now, and the Aussie CAD looks fantastic. I think Aussie CAD can come back to 9,000, 9,100. I'm staring at 9,180 specific levels that I've been targeting for the trade group. The Aussie Swiss, I mean, I'm staring at 20-year lows. I don't know what other level to look at other than it's a great spot to be considering long trades. The confirmation that I should be waiting for, I haven't waited for, but I've just been buying at low levels at small prices. And I'm just thinking I'm just going to be patient and see what we can do for the next 3 to 6 months. It's like, again, I don't know when. I don't know when. Like the next time the Aussie Swiss is down at those levels. I mean,
I'm going to move to that chart. Let's take a look at the chart before you, so that students can actually see what you're talking about when you talk about Aussie CAD, because I'm actually in on Aussie CAD, long on Aussie CAD as well, and I've got a lot of positions in. So I'm in the same boat. But yeah, continue to talk about the Aussie CAD, because I want to let them see the visuals of what you're talking about right here.
Yeah, so you can see at the top of Gary's screen, there's a nice little daily price gap up there around 91. We have the high around 91.20. And, you know, this little sub-channel, this is to break. We're very close to doing that right now. And the fact that what I like about this is yesterday's price in that BOC rate cut, we just closed above support. So rather than breaking that support and then having that become resistance, we're right back into that and closing higher. So the way that I'm seeing that now is as long as we can sustain that little love on the Aussie and a somewhat softer Canadian dollar, I think we have nice upward levels towards 9,000, 9,100. And then, of course, we get to that outer trend line and channel. I mean, that's around 91.20 right there where Gary has that line. And if we exceed 91.20, then I think we have a complete reversal on our hands. We could go from there to swing up to 93, 9,400. But I would be very happy right now with the current positions that I built up to get us back into 9,000, 9,100. I'd take a nice chunk of profit there, and then I'll reevaluate. Aussie Swiss, you know, if Gary wants to flip to other charts, Aussie Swiss, we're sitting near 20-year lows. We actually dipped slightly lower. There's a ton of technical levels at these current prices. I look at two major things on higher time frames. That's whether it's overbought or oversold, and whether price and momentum disagree or agree. In this case, on 8-hour charts, daily charts, even the weekly charts, we're starting to show all of the signs. We're confirmed on those signs that we're oversold and price and momentum does not agree. Now, that does not guarantee a bottom. That does not guarantee the bottom is here. Confirmation is probably around the corner. Confirmation is something we're going to have to wait for, but it looks better. If I had zero trades in, I couldn't go to the charts objectively and say, hey, I think I'm going to sell this. There's no way as a technical trader that I could look at that Aussie Swiss and say I'm going to sell it. There's no way. So I'm not. So I'm buying it and I'm holding it. And that's a trade that if I just kind of walk away over the next 6 to 12 months, I think it can pay a lot Obviously, things can change. We have, we're talking about rate decisions. We also have the Swiss National Bank that's been very silent through this whole thing. They continue to sit at negative 0.75%, by the way. And with the way that rates are going, it will be interesting to see if the Swiss National Bank actually takes another step further into depreciating their currency even more. We know that they've been crafty about manipulation and crafty about intervention. I've been following the Swiss franc in front of some of the deposit rates over the last month or so. And it looks like they are starting to step in. That Euro Swiss is kind of holding tight around 106. But I put together a little prediction last year with the team. Swiss franc, we've got Aussie Swiss near historical lows, New Zealand Swiss near historical lows, Euro Swiss falling from 120 all the way down to 106, sitting at great support levels. Pound Swiss off of the lows of last year, we're right into 116, 117 historical lows. It's like we have like 5 or 6 Swiss franc pairs with 20 years of history at historical tops or historical bottoms. So again,
right.
Speaking, the Swiss is due for some weakness, whether that's manipulation or whether that's bank intervention or bank assistance. It doesn't matter, but as long as that comes together and comes to fruition technically, then I'll be very happy with that.
Right. Now, if you actually take a look at Bloomberg and you look at everything on the right-hand side of it, you see everything is like Dell's down, S&P's down, Nasdaq's down. Now, listen here, VIX is up, obviously, but the thing is this, right? If we go ahead and we take a look at all the different technical analysis, we take all of that into consideration, the bottom line is, how do we trade it, right? Because that's really where it comes down to. Now, we've spoken about all these support levels, Chris and Tyson. We spoke about the news. We spoke about how everything's fitting in. But the question here is, how do we trade it? Now, Chris spoke about the Aussie Swiss. And we spoke about the position that the Aussie Swiss is sitting at right now at that very key level of support. And so my question here is, if the Aussie Swiss is sitting at that support level, do we find ourselves trading that, right? Do we find ourselves trading that, like looking for buying opportunities? Or do we simply go ahead and say, hey, you know what, this is not happening. We're going to have to go ahead and wait for confirmation of maybe a downward trend line before jumping in onto this trade. So those are the things that I can. Tyson, yes.
Yeah. I want to throw. And this is just for sake of discussion. So, right. I believe that. So the Swiss strengthening right now makes sense along with the yen in a risk-off environment. We're due for a bounce for sure. Yes. I don't necessarily know if this risk-off environment is over, though. And so with that, there are concerns about me trying to aggressively buy a commodity currency against a risk-off currency just for me. So with that being said, Chris, I know that you had talked about, I think it was last week, we were sharing text back and forth, and you were looking at an Aussie Yen short. So instead of going long the Aussie Swiss, Aussie Yen short. Instead of going long the Aussie Swiss, what do you think of a Swiss Yen short? So you're trading 2 risk-off currencies, but instead of exposing yourself to a commodity currency, you're actually looking for the biggest risk-off currency to really get strong, that yen, and you're still taking advantage of the Swiss weakness.
Yeah, that's a possibility. I actually last week because we actually had something line up. It was a nice harmonic pattern that was bullish, and I said, look, I've got Aussie CAD, Aussie Swiss, Aussie New Zealand, Aussie dollar, and Euro Aussie, favoring Aussie from a technical standpoint. So I'm long Aussie on a lot of currency pairs. Aussie Yen, I couldn't bring myself to say, hey, I'm going to buy this. So what I do, I shorted the break below 72.50 on Aussie Yen, and it went all the way down to 70. So it was a nice chunk of profit to make up for some of the positions I'm holding. I certainly have some profits that I can work with. I have some profits I can wash away some bad trades or wash away some drawdowns. Swiss Yen, Tyson, it's interesting because I'd love to see the Swiss Yen actually do something, but it's not doing anything. Like it is stuck. I mean, if one gets the upper hand, I think it's a great short. I would prefer to short the Swiss Yen at 118, versus where it is right now, fluctuating between like 113, 114. But I'd love to see the yen get the upper hand and have the Swiss just be stable. In fact, over the last couple of weeks, I mean, when we had one of the worst weeks ever in the stock market, the Swiss really didn't appreciate that much versus the yen. The yen was by far and away, day to day, the much stronger currency pair. So again, I'm not.
Will be.
Yeah, I agree. I agree. Yep.
And actually, I just had this thought too. In the instead of the Swiss yen, because I'm long the Aussie dollar. And so therefore, if I've kind of talked myself into a circle here, I like the Aussie Swiss, but I want to avoid buying anything against the Swiss, right?
Sure.
I love the Aussie dollar position, but I am concerned about the risk on, risk off type of a currency pair. So dollar yen makes the most sense, even more sense than the Swiss yen. Dollar yen short,
yeah, dollar yen's great.
Might be one of the best trades out there.
I think dollar yen. So I said this last week. We had, and again, in kind of true wild and crazy fashion, we had a very fast break above 110, ran all the way up to 112. And we have plummeted from 112 down. Now we're below 107. I've been very firm about two levels. If we break above 110, we're long. If we break below 108, we're short. So I've been very vocal about this week, last week. If we get below 108 on that dollar yen, it's a short down to 105. There's still room. There's still room to participate. We have non-farm payroll tomorrow. I hope non-farm gives us a little short-term jump and we come back up to 107, 107.50. But I still like shorting that dollar yen down to 105. If it really picks up, if that momentum really picks up, I think dollar yen has a chance to go all the way to 100 again.
Well, I agree. I think that level, if we're thinking about supply and demand, we're eating through a lot of that demand that has been created over the last multiple years at that 105 level or so.
Yeah.
If we break that, it could be to the downside real fast and furious. If I'm looking at charts, and I don't want anybody to freak out on this, but I mean, heck, we could have a free shot down to 80 if we start breaking 105, 100.
Right.
That would be crazy. But again, if you're getting involved now at 106 or a pullback at 107, it's like, give it a chance.
If we go into a recession, if earnings, S&P earnings are affected the way I think they're going to be affected in multiples, instead of expanding, they start to decrease. I see S&P 2000 potentially if we have an earnings hit and we have multiple decreasing, and that would bring the dollar yen below 100 most likely.
That'd be nuts. I mean the act of Japan and the Fed at that point would be crazy. I think you would really see like the kitchen sink from both countries as far as what they can do to prevent that.
I watch a lot of Jim Cramer and half the stuff he says is a joke, half the stuff he says is really good. But he said, the Fed interventions and stuff like that doesn't help me wanting to go out and go to restaurants or take a flight or go to the trips and stuff like that. That doesn't change my viewpoint on what could be happening with this virus. It's different. And we always say it's not, it's always the same, but this could be different this time. And we don't really know how it's all going to play out.
Sure.
So there's another question, you guys. There's another question out here from one of the students saying, will we have another federal rate cut shortly? And by the way, I'm having a technical issue, so I can't switch over the charts in there, but and different screens. But will we have another Fed rate cut shortly? And will we have a first bear market in 10 years now?
That I'll go ahead and take that.
Sure.
So this week, and in fact, we talked about this last week, Gary, and when Tad was with us and we did the same segment last week, we were watching the CME group. They have a Fed Watch tool, and they were looking at a 25 to 50 point base or a 50 basis points cut from the Fed as of last week. And again, we were all anticipating that on schedule it'd be March 18th. Well, they turned out they did it Tuesday of this week. I'm looking at the same tool right now. It's the CME Group Fed Watch tool. They're still going to hold a meeting on March 18th. And right now, there's an 80.7% probability that we're going to drop down to 0.5% to 0.75%, which would be another 50 basis points cut. So to answer that question, right now, the survey says that, yes, they would be willing to cut rates again, possibly twice this month, which would be crazy. And, we've also been talking about how does this respond? I mean, is this officially we've been planning on this dollar weakness. Is this officially the plan to get the dollar to drop? Is this officially the plan to give the market again? Is it the central bank's hope to soothe? It's not to solve. I don't think that the central banks are solving anything. I think they're making it a pain in the butt to get ourselves out of this. Tyson, we keep talking about this new normal. I think this is the central banks are creating a huge problem to actually get out of this mess that they've created. But at the same time, if they keep throwing kitchen sink policies and monetary policy in extremes, it is the new normal. And we can say it's wrong. We can say we don't agree with it. But if this is what they're going to continue to do, the market has to find a way to figure out where to go. But it would be crazy if 2 weeks from now they cut rates again and we see 2 rate cuts, a full percent within 2 to 3 weeks. That would be absolutely crazy. And so just to put that in perspective, 80% probability right now, as we're talking about this FedWatch tool, that they're going to cut rates again in the March 18th meeting, and a 20% chance they'll cut only 25 points. So this tool is looking at the Fed absolutely cutting again in 2 weeks. That's crazy. Yeah.
But that doesn't automatically the thing that a lot of traders get wrong. That short term, medium term typically will put a sell pressure under the dollar, but that doesn't automatically mean long term bearish dollar.
No.
Because of the fact that a lot of people, and I talked about this a few weeks ago, traders need to understand that money, although the Fed can print money, right? It doesn't just disappear. It's circular. It goes someplace. If I own the stock market, the Fed comes in and cuts rates. Psychologically, in my mind, I might think, uh-oh, they know something I don't. Maybe I need to sell. I'm not necessarily all that. That's not like a great thing that's going on. And so if I sell my stocks, I'm raising dollars. And if I'm raising dollars, it's putting a natural bid under the dollar. And if I don't have any other place to be able to allocate those dollars, I'm going to hold those dollars. Although I'm only getting paid almost nothing on my dollars, I'm still going to hold them and say it's a safer place to hold them in my bank account than it is in any risk asset. So the dollar has a natural bid under it. And the reason why the yen strengthens so much in these type of environments is because it's one of the main funding mechanisms of big corporations around the world. And so in these times of panic, people panic out of risk assets. They raise cash, but then they want to cover their loans or their obligations that they have out there too. And a lot of those obligations are tied back to the Japanese yen. And so it puts that natural bid under the Japanese yen. So I agree. I mean, it's hard to like think that there's going to be another cut in a week and a half.
Yeah.
But don't bet against the betting markets because it's showing you that there's an 80% chance.
Sure.
And with the Dow down, I mean, we've had massive volatility this week. I mean, all for the last 2 weeks, but this week seems like a calm week, and we're sitting here with the Dow down 1,000 points right now.
Mm-hmm.
And so, depending on how today and tomorrow closes and how we open up into next week, I mean, they could cut before the actual
Sure.
meeting. I mean, if we come in next Monday and the Dow's down another 1,000 points, Tuesday it's down 1,000 points. I mean, they might panic and say, "Hey, we need to cut again." So, who knows? I think we're kind of in a situation where it is kind of a new situation we're in. It's fun because there's volatility, which is why I always tell students, let's wrap this back to charts because price is true. And there's a lot of speculation on what could be and what might be and what might happen and all this, but what is happening is what's in the charts.
Right. And everything that's happening right now, you spoke about the JPY, why the JPY is rallying that, and that's because a lot of the JPY cash is in outside risk assets that they're trading. When you see the market here in the US dropping and a big sell-off, that's money coming back into JPY again because they're like, wait, let's just go ahead and bank it. The same thing happened this morning with Euro. We saw the DAX dropping. It had a big move. I think we're down 1.5% down on the DAX this morning. And what happened to the Euro? Suddenly Euro started rallying off. And so these are the signs we're starting to see. But also if you go back to the technicals, I wish I could get back to the chart right now again. I'm having a technical issue. I do apologize for that. But the details here is when we go back to the technicals again, it's important to be able to identify these levels of support and resistance. Now, particularly, I've seen a lot of the pound crosses hitting tops, hitting resistance, top of a trend line. It's been a bullish trend, but we're hitting those overbought conditions. And as Chris spoke earlier on about the divergence, you're starting to find divergence on a lot of these currency pairs as well, particularly the Aussie cost that he spoke about, Aussie Swiss, Aussie Canadian. But these are the type of things that we're starting to see technically that's actually indicating we don't know about the news, right? We don't know what the coronavirus is going to play out over the next few months. We know that they're looking for a solution, and when they do find a solution, we may see some change around. But the technicals right now are saying we're not supporting the fundamentals completely. We've seen the rallies, we've seen the dips, we've seen all that happening right now. But the news hasn't confirmed that things are going to start slowing down. We've seen panic in the Fed. We've seen panic in the Canadians, cutting rates, trying to stimulate the economy. All of this is taking place, but yet the technicals are saying, hey, listen here, there's places where we are going to start seeing a turnaround point. We are going to start seeing these things happen. From a trading perspective, Chris and Tyson, from a trading perspective, what is the currency pairs that you're focusing on right now that's really hot? I know Aussie CAD is one of Chris's pairs. What is the currency pairs that you're really focusing on right now?
Yeah, I'll be really. I like dollar yen short to 105. If we blow through 105, we're going to 100. There's a lot of room to the downside on dollar yen. I think any pullbacks look good to sell. We have news tomorrow. We have non-farm payroll. So if there's any blip for positive job growth, or we've had mediocre to less than average earnings. So it's like, I just think maybe a disruptive day tomorrow that gives us a chance to sell it higher, or we come back with a brief pullback next week. I still like selling the dollar yen below 108. I think the other one that I'm...
Chris, I'm interrupting there, but I want to say this. When you talk about dollar yen, right, it's great. You say pullback's going to sell and pullback. What are the expected levels of retracement that you're thinking about now? I know you mentioned the key there that below 108. So you're saying that if price moves back to 108, that's a key level for you to go start selling the game? Or are you looking at some sort of strategy you're using to sell off on those retracements?
Yeah, so two things. If we come back to 107, 107.50, 10800, those are nice round numbers. Those are nice clean numbers. I would look for those to be kind of intermediate resistance levels to sell from. System-wise, I'm lining up my right trader alignments. Right trader is a nice little trend system. We're currently in the sell zone. It's been a very active 30-minute chart. We've been able to sell it since last week and be consistently profitable for the last 2 weeks. And it's a really nice visually friendly trend system. So between the 30-minute chart, we'll probably have a pullback. On the 1-hour chart, we'll probably have a bit of a pullback or a pause. Now, the yen pairs, when they move, and what we're seeing unfold right now is this risk-off trading is also higher volatility. So a lot of higher volatility and trending conditions look like flags, which means price pushes down and pushes down again. So we might not see pushes and pullbacks, but rather we see pushes and pauses. So from that standpoint, we might not see a pullback. I mean, dollar yen is right now at 106.50. We might not see 108. We might not pull back to 108. So if we pull back 50 pips, I'll look for confirmation to sell with more bearish price action. If we pull back to 107, 107.50, I'll look for confirmation to sell. But right now, I remain a seller on dollar yen. And my other currency pair, and I know we got to wrap up here in a few minutes, and I want Tyson and Gary to speak as well. The other pair would be euro dollar. Euro dollar is sitting right around 1.12 or 1200. 1200 was the December high. I think we struck over December 2019. We had like 1210, 1215, and then it dropped all the way back down to 108. And here we are very quickly with euro now becoming a safe haven trade. We're up to 112 again. I can't fathom buying at the highs, but I have to. Like if we break above 112.20, if we break above 1200 firmly into tomorrow, into next week, I'm not going to get the swing trade that I want, but I can certainly get the scalping. And I think that there's room to run, and we can blow the run off those highs, and we can probably run to 1,1500 on the euro dollar.
Now, level of entry, right? You're looking for a price to come back to retest again. Now, I've spoken in my trading rooms about waiting for that pullback, because what's important, and what I like about Right Trader, and you spoke about it early on, what I like about Right Trader, and I spoke about that inside the class today, I said that, hey, Right Trader is a good tool to use when you want to get into those aggressive moves, because you can get in what I call the signal lines, get in on those blue channels, and just buy on the way up, because it gives you those little tight pullback. So it's a great tool to get in on the run. But I said that if price starts working its way back, I'll be looking for price to come back to retest probably what I call my expansion level, around about 110.27, give or take a few, bounce off there, and then start rallying back up. But I'm definitely seeing Euro US dollar rallying to the top side of around about, I'm looking at about 1.1600.
I love it. I love it.
Yeah, I agree. I think what I'm kind of agreeing with is the dollar. I am expecting dollar weakness at least for medium term. Starting, I was just looking at the dollar yen, and I think I may believe that we're going to get a little bit of a bigger bounce than Chris is looking for. But I think anywhere, if you want to mark down these levels, I think it's pretty clear for me between 108.30 and the recent high of 112, right around there, anywhere in that area, all the way down to 103.20, I'd be selling. Okay. That 400 pip. 350, 400 pip range right there would be my sell zone. and I would basically sell probably for the next year or two all the way down to 103. And I think we could go further than that, but I think that's pretty safe bet. 108.30 to 112, that area. Look for every opportunity to sell in that area.
We've had a 600 plus moves already. We've had 600
crazy.
plus moves down.
We are due for a retracement.
For sure.
It would be real difficult to, and I think that we have some gaps, kind of reverse gaps that we might go fill towards that 108 level, 108.50 level. But I think we'll probably start to see a topping there, and then that next flush down. And it could happen fast. I mean, these moves we get that snapback rally, we could see a next flush that takes us down real quick.
Yeah. Would you, Chris? I know you, Chris and Tyson, you both looking at this pair. Would you try and pick the bottom on this and try to trade it back up again?
It's tough. I think if you're going to do it, I think right now would be a decent place to take a shot. I would be very careful, and I would trade with, if I'm normally risking a 0.5% per trade, I'd cut that in a fifth, baby. I would really take it small. I would temper my enthusiasm and keep my stops pretty tight, because we might not get the bounce I'm looking for, and if we don't, we could just continue to flush.
Yeah,
right.
I would at the current. Personally, I'm just going to try to favor selling yen. I think the yen is strong. I think yen pairs look good to sell. Obviously, they've moved very quickly, and like I said, we don't see a lot of pullbacks, right? You want to see like, oh, where's my pullback? Where's my pullback? You got to go to smaller time frames. Like, you'll see nice little pullbacks and entries on 15-minute charts, 5-minute charts, 30-minute charts, but you're not going to see it on. I mean, look at that daily chart that Gary had up. It was literally straight down from 112 to 106.50. It's like that's crazy, straight down. And we've seen the euro do the same thing. Euro's gone straight up, euro dollar straight up, dollar yen straight down. There's a lot of just rocket ships out there that seems like it's parabolic. And the Forex market does a great job of balancing, but I would pick your battles very carefully, moving forward, especially when it comes to these strong trends that have been created.
Sure, absolutely. All right, guys, a lot of good conversation, a lot of details about the news and how the technicals line up with the news and how we're going to be able to trade it. We're definitely going to take this conversation to the next level in the next meeting, because I think we need to get into actual details of trading opportunities, and I think that'll be a really good opportunity for us to be able to share with them based on what's happening right now. In a couple of weeks or so, we definitely want to get back again, have a conversation around some trading opportunities, share with the students exactly in the details. Hey, listen here, this is what I'm doing, this is the strategy I'm using, and this is how I'm going to use it. If we can go ahead and gather some information around some good trading opportunities in a couple of weeks, let's get together again, guys, because I think the conversation around the news, what's going on around the world, and how the markets are moving, and how we're going to take advantage of those moves, I think it's important that we share it. So,
real quick, I agree. I did say something that's important, and I want to fight this next time. I said the S&P 500, I've got a $200 or $2,000 target on it, and I'm not going to come off of that. I have reasons I believe we're going to hit that, and it has to do with technicals and fundamentals. So next time we're together, I'll make sure I bring that up.
Oh, absolutely, man. And those are the things that we want to see. We want to see details, and hopefully we'll get into the grind and see where the opportunities are. But listen here, guys, great conversation. I appreciate both of you for coming in and sharing your views about the market and what you look out for. Also, traders, remember we had a little bit of technical issues. We are trying something new, so there's going to be some small technical issues that we're still going to work around, but we're getting to finalize all the details, and hopefully the next time around we're going to have a smooth run. But once again, great information, great ideas about how to be able to apply what you know about the news and take the technicals and line it up with what you're trying to see. And there it is. My camera's just gone blank on me right here. Oh, there it is. It's back again. All right. Technical issues, my friend. Hey. Technical issues. But in any case, fortunately, we should be back and running again next week. We'll sort out all the little small technical issues and get that all resolved. But I think the information that we passed over was very good. Guys, thanks again. Any final thoughts, Chris?
Final thoughts. To take advantage of. It definitely seems like a shift in strategy for me because I'm typically planning on higher time frames and more of like small trades, build positions, and I've got some positions that I'm sitting on. But it's always nice to have opportunities where you've got the trades that you don't typically trade that are really moving. I think the dollar is going to be a big mover in the near to medium term. I think the yens are going to be a big mover in the near term. So, if you have the course assets, if you have the strategies, you have the ability to look at something different or have the ability to go down to smaller time frames, there are actionable things that we can do right now to get some profits. And that, for me, those profits can help me manage and mitigate some of the risk that I have or some of the drawdowns. It can also help me just make some profits while I'm waiting out for some of these bigger positions. So there's never any dull moment in the financial markets, and certainly what we're seeing right now the last couple of weeks, it's going to get more and more interesting.
Perfect. Chris, thank you very much. And Tyson, final thoughts?
Yeah, final thought is diversification of skill sets and tools. And here's the deal. Some of the best students right now are taking advantage of things like, Slingshot and Turning Point and Right Trader. They're diversifying. They're not just in one thing. They're spreading out and evening out their equity curve by being in other strategies and doing other things, which is great. So diversification.
My final thoughts are going to be, thank you, Tyson. My final thoughts are going to be gear up, gear down. Just think about that. Just exactly what Tyson said. Diversification, using different strategies to be able to trade different market conditions, but also be able to have the ability to be able to gear it up, gear it down. What I mean by that? It means instead of trading a 1 hour, 2 hour time frame, gear it down to a 15-minute time frame. Just like Chris said, the opportunities will be there. The pullback, even in an aggressive market, you will get those opportunities. So focus traders, that doesn't mean because you got one trading system or one strategy you're using that it only works and applies to one market condition. It can be adjusted and adapted to all market conditions as long as you understand how to be able to gear it up, gear it down. If you want to find out more, make sure you get into Tyson, Chris, and myself. Get into our trading rooms, learn a little bit more about how to gear it up, how to diversify, and how to be able to use the right tools under the right conditions. My name is Gary Fichardt. This is my team, and I want to thank you for coming in. We'll see you next time. Thank you.
Thanks, guys.
Thanks, everybody.